Hi, it's Griggs with Obsidian Wisdom. Today we discuss the truth about financial advisors, answering your top 10 questions. So we've been putting videos out for a while and you have a lot of different financial planning, retirement planning questions, and some of them are about the industry, some of them are very specific, and I want to answer your top 10 questions today. So the first question, and probably one of the most common questions is, are the costs of hiring a financial planner justified, and how can their services contribute to long-term financial benefits? And really, this question can be taken in a couple ways. So, the first way is we talk about just the expertise of a financial planner. There's not a week that goes by that I don't spend time reading financial articles, understanding financial planning strategies, things that are changing in the tax code, investments, and the overall markets as a whole. Now, could someone do that and manage their own investments? I would say yes, of course. Could you get could you invest in an index fund and manage your own investments? Of course, you could do that as well. And so when it comes to the quality of a financial advisor, I say that that's really the first thing that determines whether or not it makes sense for you to invest with them. For many people, it's no different than having a personal trainer, right? Well, how do people have personal trainers? Don't you know what to do when you work out? Well, of course, most people do. Why do professional athletes have coaches? Aren't they already in the top 1% of athletes in their field? Well, that's equal as well. But then when you answer the question, well, why would Kobe Bryant hire Michael Jordan's personal trainer to help him get to the next level? And what you'll find is often twofold. One is we need someone to hold us accountable. We know what we're supposed to do, and for some reason, it's not always happening. If I can work with someone that's going to hold me accountable, make sure I wake up, make sure I do what I'm supposed to do, and doesn't allow me to talk myself out of doing what I already know I want to do, just someone that can talk me off the ledge, someone that can get me to put the shovel down so I stop digging the hole, then you find that that benefit is immense. And when you look at the numbers, that 65% of people are living paycheck to paycheck, that 64% of people are retiring broke every single day, that must mean that there is some sort of conditioning in our overall environment that keeps us from doing what we know we need to do. We all know we're going to retire one day. We all know that it's going to cost probably close to $1 million. And yet, for some reason, 65% of people retiring have less than $10,000 set aside for retirement. So where is that disconnect? And I would say if you were working with a financial planner, to me, there's no doubt that you would have more than $10,000 set aside. Also, when you look from the behavioral aspect of investing, for most people, they're going to buy high and sell low. And that's because when something is out there and everybody's talking about it and we start getting FOMO, we're going to buy that stock. People did that with Bitcoin. People did that with the metaverse. People are doing that with AI right now. People are going to buy things as it becomes more popular, as more people talk about it. You also saw that with the meme stocks as well, with GameStop and different things, where you end up buying that stock because everybody's talking about it. And that often means it's at its highest point, right? People are buying those meme stocks at $350 and things like that because they're like, okay, it's just going to keep going up and I'm going to miss out. It went from like $10 to $100, and I was thinking, well, that's not going to last. But then when it went from $100 to $200, I thought, okay, it's probably going to go down now. But then when it went from 200 to 300, I was like, holy smokes, this is going to keep going up. I'm missing out. Let me buy it now. And then obviously what happens? It goes from 300 back to 200. It goes from 200 back to 100, and you start freaking out. And so you end up selling the stocks at the lower amount. So you bought it at its highest point, but then you had to sell it at the lowest point, which often gets most people to stop investing as a whole in the stock market. It's very uncomfortable to lose your money, right? Like that's the truth. I remember investing when I was in college. I probably put like 100, $150 in this cannabis stock that one of my friends who was following it said, like, this is the best stock ever. Like, this is going to be the one that controls everything. They own all the farmland. They made it sound like it was a sure thing. And that stock went down to pennies. Like, I bought it, and I kid you not, within like 3 months, it was worth like a few pennies. And then I just stopped following it because, right, I had lost everything. And that's often what happens with most of us. We hear about this next amazing stock, and then all of a sudden that stock isn't quite so amazing. And I'll tell you one question that I often ask people that save some thousands of dollars is, why are you going to buy that stock? What about that stock seems like a good idea? And because most people are unable to answer that, right? The truth is, someone told me it was a good idea and then I bought it. But when you ask someone, hey, what is it about that stock that you like? Most people can't answer that question. And I'm not talking as much about the feeling reasons, I'm talking about the concrete reasons. How much revenue does that stock have every single year? How much of that is profits? What is their cash flows? How do they plan on investing their excess money? Do they put stuff in research and development? How does that overall sector look as a whole? Is that a good industry? Are you investing in the best newspaper company? Because newspaper companies are losing value at almost like 20, 25% every single year. So even the best newspaper company is trending down. Or are you investing in an industry that looks good with solid information and financials behind it? And when you have these conversations, these are often conversations that you learn and have with a financial planner if they're worth their salt. And that's going to help you make better financial decisions. It's going to hold you accountable, which is also going to help you achieve your financial goals. And it's just like anything. If you meet with someone once a year who you've told your goals to, and then they're going to look at this overall goal and say, hey, we're on track or we're not on track, that changes the way you feel about things. It's no different than when you meet family for the holidays or you have like one of those class reunions or really anything like that, where when you meet someone, you want to put your best foot forward. You don't want to meet them and look like you gained weight since the last time you saw them. You don't want to be unsuccessful where your car's not nice. So that's why people rent nice cars when they meet different people. There is an accountability aspect that brings the best out of us. And so it often just makes sense from both a behavioral finance perspective, where you're doing exactly what you want to do to get the results that you want, and it also makes sense from the execution perspective, where we're following the plan that we laid out so that we can get the result that we know will happen if we follow the plan. Question number two is it necessary to seek the expertise of a financial planner? And so for this question, we're really discussing whether it's a DIY type of project. In financial planning, when you're trying to get something right over 10 to 40 years, it normally makes sense to have someone who's in that industry. Whatever you do to make your money, if it's not tied to financial planning, then it often makes sense to hire someone who does make their money doing that. Now, granted, you could handle it yourself. I'm a big DIY person myself. I watch a lot of YouTube videos, and I would say I probably have like a 85, 90% success rate. Pretty good. Now, one of the times it didn't work out for me, that it could have turned out a lot worse than I had originally anticipated, but I was able to kind of make it work in the end. But obviously, if you ask my wife, she would say, no, it was awful. Don't do that again. And that's the difference between CPVC and PVC pipes. So CPVC pipes are these brittle vanilla pipes that were very cheap, that a lot of houses were made with back in the 90s. And the reason we don't use those anymore is we found out that those pipes are great unless you use them with water, which you and I would say, well, of course you're going to use the pipe with water. So what happens? Well, over time, the pipes get very brittle and they just snap. They just can break effortlessly. And if you use any modern equipment like a pipe cutter where it kind of like snaps it in place, or really any of the modern equipment, it will just snap the pipes and then water gushes everywhere. And my wife thought I was like trying to be Hulk and I was being too strong. And then when I found out that no, it was because these vanilla pipes are actually very brittle. And the only way that you can cut these pipes is with a handsaw. Anything else will snap the pipe and then water goes everywhere. Well, I had to go out and I had to figure out how to turn off like my main water valve and all this stuff. And I had water all over the place. My wife had laid out a bunch of comforters on the floor to try to absorb the water. And it was a very ugly situation. And my wife was like, look, you can't do that anymore. And it took a lot of convincing, but ultimately she was like, okay, I see that there was a difference in the pipes, and that PVC pipes, the ones that we use today, that they would not have snapped if I did the exact same thing. And our house, having been built in the mid 90s, had CPVC pipes. And so they were just going to snap. Now I know that now. And so I tell people, and I'm telling you. And so because I have that wisdom, now I have that insight. So now I have that understanding. And so now I won't make that mistake again. But I did make that mistake the first time because I did not know. That was a very unique situation, one that I had never dealt with before. When you hire a professional, they help a variety of people through a variety of situations. By you tapping into their wisdom, it can limit those mistakes from happening, where you have a plan that works for this particular type of an economic situation, and maybe you have a plan that works for a variety of economic situations. But then there's those one-off ones that you just probably wouldn't have experienced. But when you do, it ends up costing you significantly. But maybe if you just had someone that you at least could talk to, even if they just reviewed your plan every so often, there is value in having someone who does something for a living, who spends the time reading the books and understand the information, who has the certifications and the licenses, who is a fiduciary fee only advisor, for you to be able to tap that expertise, that wisdom, that insight to be able to help you and to not make that same mistake. Another reason it would make sense to seek the expertise of a financial planner would be once you have a certain amount of money. I think you and I would both agree that, sure, it may not always make sense, that there are certain things that you can kind of do on your own. You really could invest in an index fund if that's the way you want it to go. And that can work. But once you really start accumulating wealth, for most people, it just doesn't make sense to manage your own money. Now, where that number is at, it can range and vary for different people. For me, I find if you're not sure where to put your money, so if I meet someone that has 50, $100,000 that's sitting in their savings account, getting 0.001%, that lets me know that that person is either uncomfortable investing or they're not sure what to do with their money. So they got raises, they got rid of their debt, they don't know what to do with their money. If you're very busy and don't have the time to follow the information as readily as you used to, like something has changed in the amount of time that you can allocate towards your investment, then it might make sense for you to make a shift where you use the expertise of a financial planner. There are a variety of reasons that people can do it. Well, I say people have to hire a financial planner. Well, no, you don't have to hire a financial planner. But can I say for a large group of people, it's very beneficial to hire a financial planner? I can't say that with confidence. Granted, you have to hire the right financial planner. But if you hire the right financial planner, it will work out over the long term in your benefit. Question number three is, how can I find a trustworthy financial planner who will genuinely prioritize my financial well being? Now, this really is a tough one. And it's one of those things where if you ever had a business and you hired someone, people can make the resume look good, people can make everything look good. And then you hire them and it's like, oh, you don't really know what you're doing. You don't really know what you're talking about. You put on a good front, but I don't really know anymore. Now, naturally, I would say you want to set yourself up for success. Let's go ahead and find someone who has the education and experience necessary. So that normally means that they would have a bachelor's degree in finance or accounting or economics, something in that field that lends them the insight necessary to be a good financial planner. So for me, I have a bachelor's and a master's degree in economics. I also have a master's in biblical studies. You may not feel like that is linked as much, but for me, and you know from the name of the company and just the way that I discussed, wisdom is very important for me. Wisdom and the insights necessary. So that's part of the reason I study biblical studies is I read the Bible from the perspective of the wisdom and the knowledge that is inside of it and the ability that we have to take that valuable information and apply it to our lives to make every single day that much better for us. Once you have verified that the person has the education, then you want to see if they have any credentials, certifications, how long they've been in the industry, how long have they been practicing, are there any reviews, or are there any complaints against that person? What do people say? How do you feel when you talk to them? It even makes sense to understand their overall investment philosophy because sometimes you may find someone that's perfectly aligned as far as their professionalism, their education, their certification, their real experience, but their investment philosophy is so different that it just doesn't make sense for you to partner with them. And the last two things you want to check is how's that person get paid and are they a fiduciary? A fiduciary just means that they are by law obligated to put your interests ahead of their own. I am a fiduciary. I am by law obligated, registered in the state of Florida. You can reach out to them and be like, hey, Andrew Griggs did not do right by me. Can you help me? And you can open a case and you can file investigations when you have fiduciary. When you're dealing with someone who's like a financial coach, on the bottom, they normally tell you, hey, look, everything I said, don't hold it against me. I'm not really a licensed financial advisor. I can't help you anyways. So you're kind of going at your own risk, which for you may be too much risk when you're talking about your hard earned money that you've worked to accumulate and then you're going to hand it to someone. There's so many bad stories out there. And as I told you, that's half the reason that I make so much content is because I'm trying to give you guys enough valuable information to where you can easily recognize, okay, that's a scam, right? Dre talked to me. He gave me the numbers. He gave me the data. I know that this is what is reasonable. And I know what this person is offering is not reasonable. They are scamming me. And that's really what my goal is and the reason I do this in the first place. Question number four is, can financial planning accommodate my busy schedule? So you get this often where people are just super busy, where the work I do takes up a significant amount of my time. And then when I get home, I'm normally either tired or I have to work and hang out with my kids and my family. And so I don't normally have time to meet with a financial planner. You can't have me driving across town and make me kind of get all these documents and this paperwork on a regular basis. And for the most part, this depends a lot on your personal preferences. There are people who are like, Dre, I want to be able to shake your hand, right? I'm old school. You need to be able to meet me face to face. I want to look in your eyes and have you answer my questions to where I'm comfortable with you. If you're someone that's like that, sure, that's great. We can do that as well. If you're someone who's okay meeting virtually, that option is available. I'm talking to you guys by video right now. It's very common now to meet virtually. And there's some people who will say in the future that we'll have the little goggles on with the metaverse and that we'll be in our avatar person. We'll buy like avatar suits and I'll buy an avatar office and we'll meet in our virtual office. Now that's probably way down the line and most people probably aren't interested in doing that. But I'm just simply saying that yes, as times change and technology improves, it makes things more efficient and easy for you. Now, there are some people where all of our interactions are by email because they're very busy. So they don't have time to meet face to face as much. And so every time we talk, it's by email where I put the report together and it has all the information. And then I'll record a video where I'll say, hey, on page 3, this is what I noticed. This is what we're doing. On page 4, this is what I see. And this is how we're doing. And overall, this is how we're looking. This is how we're trending. Where it's not just I send you the report because if you see a bunch of numbers, you may be like, well, what does that even mean? But I will send you a video that goes along with the report that explains to you exactly what you're looking at. This is how we're doing. This is what you can expect. These are the benchmarks, whether we're trending towards plan, whether we should make an adjustment, where I have some questions for you, and those will be your action items. And you'll answer those and send that back to me. And then it may have a day, or it may have a 2, or may even have a 3-day lag because of how busy you are, but we're still progressing towards your overall goal. You're still getting the information that you need. And there are a variety of ways that we can do it. Everything from meeting in person and shaking hands over a cup of coffee or tea to us not even really talking that often, but we exchange emails and we stay up to date. To in the middle, we may have video conferences and meet virtually where it's still live and I can actively answer any questions that you have and we can make sure that we're still on track. Question number 5, can a financial planner simplify complex financial concepts? The short answer is yes, right? If a financial planner genuinely understands what they're doing, you guys have probably heard it a lot. A good teacher is someone who can make the complex things seem simple. If you cannot make something that's complex seem simple, then you don't understand it enough to be able to explain it. As a father of 4 children, that is often the way most of our discussions go. It's not whether I know it, it's whether I can convey the information in a way that my kids understand it. And when it comes to most explanations, I have found that less is more. That the simpler we can make things, the easier that we can make things to understand, the fewer words that we use, that we're able to convey the information in a very clear way. And if you've ever watched any of my videos, you know that I often will say something like, that's a fancy way of saying, because that is how I bridge the information from the technical jargon in the financial industry to everyday conversations that you and I would have at maybe a football game or something like that, where you have just a general question and here's the answer to that question to where things make sense. And oftentimes for me, there's normally like 3 levels of understanding. So first is the knowledge where we know the information, we have it. We know exactly what to do. We read it online. If I want to lose weight, I know I need to run and eat less. If I want to cut a tree down, I know I need to get an axe and chop it down. And then normally when we go up a level, it's understanding. It's like, why are we doing that? And understanding is saying, okay, I want to lose weight because I want to be healthier, because I don't want my back to hurt, or I want to be able to live long and go to my kids' weddings, or quality of life, or I want to look different. Whatever the reason is, that's the why that you want to do it. That's the understanding. And then when you talk about the cutting the tree, why we're doing it, maybe because the roots are growing too close to my house and it's going to mess up my foundation. Or maybe the hurricane kind of knocked it a little bit. And so it seems like it's going to fall over. So I'm just going to go ahead and get rid of the tree. That's your understanding. So for most people, they operate at the knowledge level where they just can repeat something that they've heard. They have no understanding of why it makes sense in any particular situation. Well, when does it make sense to invest in the stock market? And when does it make sense to invest in bonds? When does it make sense to invest in real estate versus when it makes sense to reinvest in my business? These are questions that people have that requires more than a surface level of knowledge where you can repeat something in a book, but you need to have an understanding of what the person's trying to accomplish. And then that leads you to the third level, which is wisdom. Again, you guys know I'm big on wisdom. And you guys know, in my opinion, that is the core foundation of creating sustainable wealth and family success is having the wisdom. And the wisdom is how we do it. And when we talk about how we do something, that is where someone is worth their salt in the ability to explain something complex in a simple way. If I told you you need to work out more and eat less, well, how are we going to do that? Are we going to work out together once a week, twice a week, 3 times a week? Are we going to lift weights? Are we going to run? Are we going to do cardio? Like, how are we going to do that? Because there are so many ways to do something. Same with building wealth. There are a ton of ways to build wealth, and a lot of it depends on your goals, your time horizon, which is a very fancy way of saying how long can the money be invested without you needing to touch it. And so when you go back to the other example, which we had is cutting a tree down. Okay, well, we know we need to cut it with an axe, but maybe the wisdom and how we do it would tell us that we need to make sure that it's going to not fall on the house. Maybe it will tell us you don't actually need an axe. Maybe we could cut it with a chainsaw. Wisdom might then have you wonder, okay, well, how are we going to get rid of the tree? Does it have to be cut to a certain size for the yard people to pick it up on the yard trash day? Because you and I both know if you don't cut it to the size, they're going to leave it there. And so what is that? Can I put it all out this coming week, or do I need to wait multiple weeks because they're not going to take it every single time? There are so many things that go into that, how we do things, where the actual wisdom is that's what separates someone. If someone can't explain things in a simple way, then you'll find that they don't actually have the wisdom and the insights to be able to do that for you. So we're halfway done. So I hope you're enjoying this. So question number 6, how can I ensure a positive experience with a new financial planner and avoid the issues I faced in the past? All right. So this is one of those questions where you didn't have a good relationship with your previous financial planner and you are borderline thinking, I don't even want to talk to anyone else, but I understand that I probably should at least consider it. And so you're like, what could I do to make sure that I don't get screwed over again? If it was something unethical like fraud or something like that, then normally the first thing I want to do is make sure that the person is licensed and you have that recourse to get your money back if they break a crime. If it's communication, then you want to ask the financial planner, hey, is it going to be you that I talk to, or is it going to be your assistant that I talk to? Are you going to give me monthly updates, weekly updates? Can I reach out to you whenever I want to update? You just want to get some sort of a communication schedule established. If it comes to the investments where you just felt like they weren't really following the strategy that you agreed upon, then you should get the strategy in writing. go ahead and get an investment profile established where it lists out what the overall goal is, what are the investments that we're going to have, what have we agreed to, because then you can hold someone accountable. And then if they alter from that investment profile that we created together, that they signed and you signed, then you can be like, hey, this is not according to the plan. Now, granted, they may be able to explain to you why they made the change, and then it's up to you to decide if that is okay. But oftentimes they should have communicated that to you ahead of time. But if for some reason they didn't and they have a reason that you're comfortable with, just go ahead and know to keep track of it, right? I'm not saying that everybody should just go out there and fire their advisor every time they have a disagreement. But what I am saying that oftentimes you can establish what is a normal relationship. So my mom, when she was teaching, she would teach in an alternative school, right? Where the kids maybe would get in trouble, they would fight kind of often, or whatever was going on. For some reason, they were moved from the normal school population, put in a separate school population. And when my mom would enter a room, you could always hear like a pin drop. And even if the people were fighting and there was something that was going on, they would always calm down and act differently. And I would look and I would ask her, and other teachers would ask her too. And they would be like, hey, Mrs. Griggs, why does little Johnny tighten up every time he come around and does what he's supposed to do? And she would say very simply that people treat you the way that you allow them to treat you. And that if you don't want to be treated a certain way, you let them know that that is unacceptable. And unacceptable can mean that they get punished. It can mean that you don't talk to them. It mean that you end the relationship and we're done completely forever. Don't cross go. Do not collect $200. But you have to convey to that person what is acceptable, because what we say is one thing, but what we do is another thing. When we tell our kids, hey, you have to clean your room before you go out, and then they go out without cleaning their room, well, the kid will say, yeah, dad said I had to clean my room, but I'm out. So he must not really have meant that, which is why it's very important that you want to be consistent in your relationship. And that's why it's very important that you want to be consistent in your relationship, because I am a big believer of it, because it is one of my core values. But when you are consistent, it lets people know exactly how that relationship is going to unfold. And that if you have a standard that you are going to hold them to and you're going to hold yourself to, which in my personal opinion is why most people aren't holding people to a standard, because they know it implies that they have to be held to that same standard, which is why most people don't want to hold someone to a standard, because it puts the light back on us. I say all that to say, once you start your new plan or relationship, establish what is acceptable, what is the norm, what will cause the relationship to be terminated, and then maintain that standard. Because the moment that you allow the financial planner to do less than what they promised, then that's going to be the beginning of the end. And now, granted, some people will have situations, as I've told you, things happen. There are one offs that happen. And maybe when you have a discussion with them, you can remind them, hey, this is what we agreed upon, and this is what you said you would do for me and what I would do back for you. And if we can't maintain that relationship, you need to let me know ahead of time, because then I can have the option to go somewhere else. Question number 7 is, given market uncertainties, how can a financial planner help manage risk and create strategies aligned with my goals? So this is a really good question, and I get this one a lot. I'm big on letting someone know the volatility of their investments, which is a very fancy way of saying this is going to average an 8% return. Historically, in the worst year, it lost like 15%. Historically, in the best year, it gained like 30%. So we said, hey, look, the average is going to be somewhere around like 8 to 10%. That's what you can expect, but it will fluctuate. And so once you have that set understanding, like, hey, this is how it's going to perform. And so normally it's going to help people when they're talking about market volatility. I've already told you ahead of time, look, this portfolio on its worst year is going to get 15% historically. On its best year, it's going to get you 30% historically. And then somewhere in the middle is where you normally average. You normally average like an 8%. And then I may go a level deeper if you're comfortable with that additional information, where I'll say, so historically that 15% happened maybe like 10% of the time. And then you maybe 70% of the time you got that 8 to 10%. And then maybe 30% of the time you were able to gain that 30%, right? Like I'll go into the actual probability of each of the ratios. But for most people, they don't really need to know that. They want to know what the worst is, what the best is, and what the average is. And depending on your overall risk tolerance, we already know what that is. I already know that you're going to be okay with someone who can manage a strategy where you may see a 50% loss once every 10 years, but on average, you'll gain 10%, and you'll see an amazing couple years where you'll average like 20 to 30% as well. And if you're someone who can't stomach seeing a 15% loss, then we'll put a portfolio together that has less volatility. And again, all volatility is what the range is of the overall return. So instead of us having a strategy where it loses 15%, we can put a strategy together where your worst year, maybe you only lose 1 or 2%. But then you have like 5% on average, and maybe the best years you may have like 11 or 12%. Where you see what we did is we lowered the volatility. So instead of it being minus 15 to plus 30 being the range, instead now it's only like a 1% loss to like 11%. So it's a much smaller range. So you're going to have less heartache, right? The range is significantly smaller, has a lot less volatility. It's going to do about what we expect. And when it comes to achieving those returns and limiting the volatility, that comes down to asset allocation. So your asset allocation is like, are we invested in stocks or bonds? Are we invested in foreign, international? Are we invested in small caps or large caps, mid caps? Or invested in real estate funds? Like, where is the money going? Those are your assets that you'll allocate your money. There's studies out there that says upwards of 90% of your returns is driven by asset allocation, which means that if we put the right mix together, then that's going to determine what your overall return is. And it said less than 7% of your return is driven by things like market timing and whether you choose the right stocks and whether you choose the right mutual funds. That 90% of it is choosing the right asset. And once you have that strategy in place where we have assets that perform well in a variety of different markets. So, for example, there's going to be high inflationary times, there's going to be low inflationary times. There's going to be economic growth, there's going to be economic decline. Well, in each of those markets, there's different assets that perform better than others. And when you put your portfolio together, then you just have to choose assets that perform well in each of those markets. So that way you are able to mitigate some of the losses and you're able to take advantage of some of the growth. Now, depending on how long you have, you could take more risk, where the majority of the time the market is typically trending up. So you can lean heavier in assets that perform well during times of economic growth, knowing that there's going to be the times of economic decline, like a recession that comes about once every 10 years, where you will have that 15, 20, maybe even 30% loss. But for the most part, you're going to have those significant gains as well. It definitely depends a lot on your overall risk profile, but it's very possible to put together an asset allocation that performs well in a variety of markets that limits your overall risk, but allows you to take advantage of some of the upside as well. Question number 8, how can I navigate the financial industry with confidence? So when it comes to working with a financial planner, there's really three things that you want to be able to take advantage of. Number one is you want to make sure that the person is ethical, where they have a good reputation, where you see them out in the community, where they share their knowledge and information. They've been in the industry for a while. They have the background and different information. Number two is they need to be transparent about how they get paid. You have to know how someone gets paid to be able to determine whether or not you can work together. You are allowed to have a conflict of interest as a financial planner. You simply have to tell your client of any such conflict of interest before you engage in any relationship. It's no different than if you ever watch like sports. It's no different than if you watch sports. So, for example, they may say, hey, I have a personal relationship with this person that I'm about to make a comment about, just so you know that that conflict of interest exists. Or if ESPN is to say something about Disney, they'll be like, hey, Disney is our parent company, just so you know that that relationship exists. It doesn't mean that the person inherently is going to lie to you. It doesn't mean that they're going to be misleading or untrustworthy, but it does let you know that the person has a conflict of interest. And then you can make the decision of whether you want to continue listening to them, whether you want to continue working with them. And it works the same way with your financial planner. They let you know of their conflict of interest. Hey, I'm invested here, or I'm at there, or I'm on this board, and my wife works here. And then you decide whether that is something that you can deal with, or whether you think that's something that can cloud the overall situation, muddy the waters a little bit, and you don't want to work with them. So for most advisors, there's normally three ways that they get paid. Now they're going to get paid fee only, which means that they get paid by you, and that relationship is normally going to have the least conflict of interest because their money is from you. And because their money is from you, they normally have to answer to you. We all answer to whoever pays us. That's the person who decides whether we put food on our table for our kids. So when you have that direct relationship, that's often a really good situation. Now, some people will say, well, I don't like that because I have to pay more upfront, which is true. If you had a commission only advisor, then you don't technically pay them. They get paid from the fees that you're charged by the product. Now, naturally, the issue with that is just as you just heard, they get paid by the products that they offer you, not the services that they render. Because they get paid by the products that they offer, and the way I would describe most commission structures is it's not the advisor is inherently against you. And what that means is the advisor could be giving you the best recommendation they can give based on the products they can offer. So this could be like a personal banker when you go to your bank where they're like, all right, this bank has like these 5 products. I'm going to give you the best one for your situation. But because the bank designed the products, they already, just like a casino, have tilted the odds in their favor. And so it'd be no different than if you went to play blackjack or poker. Yes, the dealer is unbiased. Sure, the dealer is not out to screw you over, but it doesn't change the fact that because the game is designed in a way where you're going to lose the majority of the time, that just by the dealer giving you the cards, they've already helped out the casino. And so that's sometimes what happens with some of these commission products is the person is great and they're going to work very well for you. But because the casino, because the insurance company, because the bank designed the overall product, it ends up benefiting the institution more than it benefits the client. Now, sometimes we have a mixture of both where maybe they'll be like fee based. So they may have some things that they charge you, like making the financial plan. Maybe they charge you a flat rate, a flat hourly fee. But then when it comes to offering insurance products, maybe they offer those because most insurance products are offered on a commission structure where they get paid a percentage of your first year's premium. And so they are fee based where they have a little bit of both. But normally having a fee only fiduciary advisor where they get paid based on either the percentage of assets they hold, or you pay them an hourly fee, or whether it's a percentage of your overall income, however that is, it's something that is designed based on your situation, your income, your assets, and then you pay them directly. So they get paid based off of your success. And the third one, as we mentioned, is you just want to make sure it's open communication. When you send an email, whatever they said, if it takes them 24 hours or 48 hours to respond, whatever you agreed upon, they need to respond. If you have a question about your investments, even if it's just simply talking you off the ledge or it's like, hey, look, this is what we talked about. Everything's okay. We're on track. They just should be able to communicate that with you. Even if they're super busy and it takes them a month to get on the calendar, however that looks, they just have to have effective communication. We're not saying that the person should respond to you in 5 minutes, but we are saying that whatever the communication that has been set up, that you signed, that they signed, and everybody agreed to, it should be honored. And that if it's going to be changed, that there should be a discussion about the change and it should be agreed upon as well. That you just want to be able to have that communication, want to be able to talk to your advisor once a year, once a quarter, however the frequency that you set up, and they're able to present to you how everything's going and how you're doing. Without the effective communication, in my personal opinion, it just makes it hard to be a good financial planner because as your situation changes, then your financial plan should change as well. As your overall retirement goals change, then your wealthy retirement plan should change as well. As the legacy, as you have more kids or you move in different situations, it needs to be updated in your overall financial plan. And the only way that can be done is with effective and regular communication. Question number 9, is a DIY approach sufficient or can a financial planner offer valuable insights and strategies that complement my efforts? So I think we answered this question already a little earlier, but the idea here is if you have a simple plan and you're just starting out, then you probably could do it on your own. As you accumulate more money and as the stakes become a little bit higher, it probably makes sense to hire a financial planner to make sure that you get it right the first time. The goal is to get rich once and never have to get rich again. And oftentimes, the experience and the insight and the wisdom that a financial planner has, having dealt with this for a variety of clients, they normally can set you up in a really good situation. But to answer the question directly, could you do it yourself? Of course, you could do it yourself. Does it make sense to do it yourself? If you have the time to follow the information and to stay in touch, to kind of do the evaluations to make sure you're allocated and following along and updating and adjusting your plan periodically, where if you get remarried, you adjust the beneficiaries. If you have more kids, you adjust the distribution of your assets. And as you pay off debt or you add debt, that you adjust how much you need for your retirement lifestyle. All these things are things that a lot of people can do, but we often are so busy doing whatever it was that made us the money that we don't normally have the time to be able to do it. And my selfish goal is to help each of you accumulate so much wealth that it just makes sense for you to hire a financial planner, that it doesn't make sense for you to manage it on your own because it's too much. You and I both know that there is some number that we would probably be very surprised that anyone who has that much or higher would manage their own money. For example, one of my favorite shows is Shark Tank. You and I would probably be very surprised if everyone in Shark Tank doesn't have a team that includes an attorney, a financial planner, an accountant, probably all sorts of professionals. Now, does that mean you have to have hundreds of millions of dollars before you hire a financial planner? Well, probably not. But there is a number where it makes sense to hire a financial planner. I think we would both agree on that. That at some point you would say, well, why would that person manage their own money? They're obviously doing so much other stuff that they should just hire someone else to handle that for them. And that's how I feel about most things. Most things, even if we could do it ourselves, at some point it just makes financial sense to hire someone else to do it. And last but not least, question 10, is financial planning beneficial for individuals at all income levels? Well, of course it is. Financial planning is done at a variety of stages. There are a variety of life situations that happen that requires a solid financial plan in place. Jim Rohn is someone I would listen to, and he would say, if you want to be healthy, create a health plan. If you want to be wealthy, create a wealth plan. If you want to be debt-free, create a debt-free plan. If you want to have a successful marriage, create a successful marriage plan. If you want to be happy, create a happiness plan. Whatever you want to accomplish in your life, you need to be intentional and have a plan in place. That's why I am a financial planner. I want to help people live their dream life. With that said, different people have different goals that they're trying to accomplish. There are people who just want to get out of debt. Well, a financial planner can help you with that. There are people who want to pay for their kids' college. Well, a financial planner can help you with that. There are people who want to save for the down payment of their house. Again, a financial planner can help you with that. There are people who want to have a wealthy retirement. A financial planner can help you with that. There are people who want to leave generational wealth. A financial planner can help you with that. If you're going to reach out and ask for advice from someone, it might as well be a licensed and professional financial planner. Because as much as we love that one family member that doesn't mind answering our questions, it doesn't mean that they're right all the time. Heck, I'm not right all the time, but I can explain my reasoning in a way where you understand that I was giving us the highest probability of success. And everybody can't say that. Everybody has an opinion, and then you ask them how you made that opinion. And I find people will be like, well, there's this one time or these two times. And I'll be like, but is that enough of a sample size? Is that enough to be able to say with confidence that what you're doing makes sense? Or did you just go to Vegas and roll the ball on the roulette table and it just hit red and you put all your money on red? But should everybody do that? Would that work long term? Could you do that 10 times in a row and guess right 10 times in a row? Well, sure, it's some possibility of that happening, but it's highly unlikely that that would happen. And I find that a lot of people give recommendations that are highly unlikely to happen. And whatever your dream life looks like, there's a real possibility that you're going to need some money to be able to accomplish that. Whether you want to take trips, whether you want to help your kids out, whatever it is that you want to do, it's a high likelihood that you'll need some money to be able to do that. And if that is true, then that means that you have the need for a financial planner and they can help you with whatever your goal is, again, if they're worth their salt. We all have specialties, and mine is helping families solve generational wealth through wealthy retirement planning. That is my specialty. That is the information that I absorb every single day, every single week, every time I'm tweaking and reading and understanding and adjusting. That is where I spend all of my time because I want to help my family achieve financial freedom. I want to help my family build generational wealth. I want to make sure that my kids start on the right foot where I share some of the wisdom and understanding that I've gained over these years. And I want to be able to share that same insight with you and your family. Hopefully you found value in this video. If you did, I simply ask for you to like and subscribe so you can continue receiving valuable insights on how to solve generational wealth through wealthy retirement planning. If you have a question for me, feel free to put in the comments, and the next time I make a video, I'll answer that question for you. Until next time, stay safe and enjoy life.